Does the outlook on the economy and equities leave any room for purchasing precious metals? We're speaking with Colin Hamilton today. He's the commodity analyst for BMO Capital Markets. Welcome back to the show,
Thank
Colin.
you so much.
And congratulations on another fantastic conference here, record attendance, I believe. And let's start with a macro landscape overview here. BMO's 2019 investment strategy came out in sometime in November, and your firm reiterated your long-term secular bull stance in the S&P 500. So how can investors fit precious metals into their plan in a world of improving equities and perhaps less of a need for safe havens here?
It's interesting. Precious metals are always used as a risk diversifier. So what we have is portfolio managers who are happy to hold an element of precious metals in their portfolio. I think the equity side is an interesting one because your marginal buyer of gold and many other precious metals these days is a macro asset allocator. It's no longer your retail investor. And with that, it's about these equities making themselves more relevant, which is why perhaps we're seeing some of the consolidation we're seeing in the industry. Because at the moment, ETFs are becoming cheaper all the time. We have options markets, which are now highly accessible to your average investor. But equities, they obviously become with a bit more complexity. And with that, this is why we're seeing bigger gold companies forming and why we're starting to see precious metals, they're starting to look at dividends and shareholder return, many of the things that their peers have done to try and make themselves more interesting to the wider investor.
Interesting. Well, let's talk about the sentiment that we're seeing in the gold market here. Obviously, the metal's been having a nice run since the start of the year. Do you feel that the gold bulls' euphoria, in a sense, is justified? Is it sustainable?
Justified, I think, certainly. I mean, what we've had is some of the headwinds for gold that were here last year have turned around. US dollar is no longer trend strengthening to the same extent. Central banks are back buying again a bit more aggressively than before. And even we've seen a pickup in retail investment as emerging market inflation has re-emerged. The question now is going to be a sustainability of that. We're starting to see, obviously, with hopes of a trade deal coming through between the US and China, that maybe the bottoming in the industrial economy is coming through. Now the question now is, do we start to see gold and precious metals used as a funding source for rotation back into industrial economy? I still think gold has actually been very low volatility over the past year. It's been stuck in its range. And actually, if we look at it in terms of things like Australian dollar gold prices and Canadian dollar gold prices, they're actually very high. So I think from that element, I mean, the gold bulls
Right. So, Colin, do you think it's really ultimately if the US dollar comes down more and the next Fed move?
Yes.
What are going to be the primary drivers?
And it's interesting, we asked the polling question at the conference. I mean, how many Federal Reserve hikes do you see this year? Interestingly, no one was backing a cut. And still people were looking for 1 to 2 hikes, and I would say that's still coming down. I think you'll continue to see that expectation of hikes fall over the coming period.
Outside of gold, looking at the rest of the precious metal space here, let's talk palladium, the shining star here. You know, we're speaking today at 1,500, higher than the price of gold. Was this expected?
Certainly not to the extent we've seen it. Now, of course, the background here is that the auto industry have had to meet the real world emission standards following the diesel emission scandal we had, and they bumped up palladium in the catalyst. The question now is, it should be unsustainably high at the moment. It's at such a premium to platinum that you'd expect some normalization. The question is, how quickly can this happen? And at the moment, we're clearly in a deficit market. People are scrambling for supply. And with that, I mean...
So is it really the catalytic converters, the driver here behind palladium? And
yes, and even in a weak auto sales environment, we're seeing it rise, which is down to the loadings in the catalysts themselves. I say to meet the greater emission standards, the auto companies and the catalyst manufacturers have just bumped up the palladium content. Now that will start to be reversed, but it may take 2 or 3 years. It's very expensive and very time consuming to qualify a catalyst for use in a car. Therefore, it can be a 2 to 3 year cycle before you see normalization.
Changing gears here, looking to the base metal space, let's talk copper and whether, you know, what you forecast here for copper. Is it a buy here?
Yeah, I mean, copper is a buy. I've got to say I was surprised that it's run quite so quickly back to $3 a pound. And again, a lot of that is to do with some optimism, I think, on the trade deal. But in terms of copper, this is the first time in my career we've only got one large new copper mine coming to market this year, Cobre Panama for First Quantum. Aside from that, there's nothing. And as a commodity analyst, I look for supply constraints. In copper, I do think we have that long forecasted deficit, but suddenly it's upon us. So for me, I'm expecting copper to add another 20% in the second half of the year. but I think people need to see better Chinese macro data first.
So if I had to ask you to pick between the base metals and the precious metals, which market is looking stronger to you?
I think at the moment precious metals at the current time is looking stronger, but if we do see that lagged impact of China's big fiscal spending coming through, the base metals will start to improve, but I don't think it's quite yet. I think we need to get that big macro month of March out of the way first.
All right, well Colin, thank you so much for speaking with us. Appreciate your thoughts, and thank you for watching. We'll have much more for you, so be sure to stay tuned.